Should you be stock market wary, and is CSL a buy? Is the economy really improving? And super tips for the end of the year. I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.
All right, Paul, the stock market has been kicking butt big time, and a lot of the amateur players have got in, a lot of the fund managers have missed out. Paul, is it time to be really wary? And on the flip side, is it time to buy a great stock like CSL?
Well, I think, Peter, it's time to be just a little bit cautious, but you just can't ignore the power of this upswing. Obviously, we're just following the US, but the US has been so strong. It'd be a brave person to say, you know, the US is all over. In fact, the NASDAQ is officially in a bull market, and I guess the others are getting there pretty close, if not already. So, you know, the trend is your friend here. I'm not buying at these levels, and a pullback is on the cards, but I wouldn't say
a pullback as opposed to a correction, as opposed to a crash.
Yeah, I mean we're sailing again. The party's on. I think
Don't take away the big punch bowl.
I think it's a buy and dip strategy still, and
buy on the dip.
I was just looking at today. You know, for investors in the NAB share purchase plan who paid $14.15, NAB closed yesterday at $20.45. That's a gain of 45%.
But just saying yes.
Just saying yes. So you can, you know, some retail investors have done it pretty well, and again, probably a lot smarter than some of the so-called smarties out there.
And let's hope that it remains that way,
Yep.
Paul. Now, before we're going to have to ignore the bell. CSL quickly.
You can't ignore the bell, but let's talk about CSL quickly.
It was $341 a few weeks ago, I guess, down to $278 now. That's about a 23% gain. If this stock could get back to where it was, you know, 6 weeks or 7 weeks ago, it'd be a 23%. Is someone sort of should be thinking about buying CSL?
Look, I think so, Peter. I mean, the thing that's part of the reason for CSL is there's two reasons. One is healthcare is seen as a defensive sector, and we're following the US lead, and so other sectors have done better. A bit of a rotation, but the other thing, of course, counting against CSL and the ResMeds and the Ramsays and the others to some extent is, of course, the appreciation of the Australian dollar. Yeah. We've gone from we got to 56, 57 cents. We've gone up to 70 cents. It's a big gain in currency. CSL earns 90% of its revenue outside Australia, as does companies like ResMed. So, you know, so people are looking at that and saying, well, okay, we know CSL uses what's called a constant currency to take away that. But at the end of the day, what you as shareholders get comes back in Australian dollars. And I think a few of the funds have just been a bit cautious because they've been seeing the dollar. So it's a bit of a dollar story as much as a rotation story. Yeah. I think CSL is a stock to load up on. Wait for a dip. Maybe you have a little dabble hit. Certainly not sell territory. CSL isn't buy territory. Yeah. It's just a question of how you allocate.
Yes, right. Yep. As I said, CSL might go down over the next week, so it's worth keeping an eye on that number. 278 looks pretty attractive. For. Let's go to, is the economy really improving? Because the economy also, you said America, but the Aussie economy is showing some good signs as well.
It is, Peter, and look, these are public figures. For example, Tyro, one of the big FPOS acquirers out there, puts out weekly turnover figures. It actually showed growth for the first 5 days of June compared to last year. So, look, that's growing itself. But
Tyro, those little machines at cafes and restaurants that we put our card on, and is it on the side?
Yeah, on the side, lots of restaurants, lots of shops. So there is actually good signs of good economic growth coming back a lot quicker. Yeah. If you've been a bit like us, Peter, and social distancing in the cities are pretty empty. The suburbs are cooking, right? So, but there are some good signs that the economy is coming back and more restrictions are easing. So I'm starting to believe, I don't know whether it's actually a V-shaped economic recovery. Certainly it's been a V-shaped stock market, right? Yeah. I've always been a believer of the U-shape, or more like for the economic recovery.
Suspicious of me being a bit V-ish.
Well, you're glass half full. I'm the glass half empty guy.
Always
you're V. I'm a U. But I have to say,
some of that V and that V.
Some of the figures on the economy, Peter, and we'll see consumer confidence today. I think there's a readout on that, which you've been saying week after week is going up.
9 weeks in a row.
Yep. Suggesting maybe we are. It is a bit more V-shape out there.
Let's keep our fingers crossed. Finally, super tips, Paul. End of the financial year, we're extending a little.
Yeah. Well, look, only about 20 sleeps to go to the end of financial year, so who's counting? Yes, I think this is exactly 20.
Super is good for sleeping.
But you need to get your action in. So the three big things for super. One is if you can maximise your contributions. So a thing that a lot of people have forgotten about is that within that $25,000, the so-called concessional cap, anyone can claim a tax deduction for personal contribution you make in that cap. So the three things that make the 25,000 concessional cap are your employer's 9.5%,
Yep.
any amount you salary sacrifice, and if those things don't equal 25,000, you can still put the additional money in, your own money into super, and get a tax deduction this year. So don't forget about that. Up to 25,000 potentially is all tax deductible. So
because any money that goes into super is at a much lower rate than that has already been taxed at.
And you get a personal tax deduction. It used to be you had to be self-employed to do it. That rule changed a couple of years ago, so don't forget about that. And then two other things. Pension payments, if you are taking a pension, you need to get that done. But thirdly, access some of the government assistance, right? So the so-called co-contribution for low-income workers, or maybe your adult child or adult grandchild who's doing a bit of work, you can make a contribution to their super in their name. They can get the co-contribution from the government. There's also a tax rebate for spouse contributions. So there are a whole lot of tips that you can get more out of the super system. Go to our website, you can see it there.
And if you're a younger person, you could either beg your parents or grandparents or be nice to them and then suggest they could put some money into your super as well.
I think the co-contributions, I mean, I used to do this for my daughters, they're a bit older now. But
are they nice to you around super time?
They're always nice to me, Pete. I had to think about that carefully, as you can imagine, but they're always nice to me, especially around super time. But the co-contribution, as I said, if you've got an adult child who's done some part-time work, help them make a contribution to super, and potentially you get $500 back from the government free. It's a no-brainer out there. We don't give too many no-brainers, but we're here to help, right?
And also, you should write about this week, Paul. And
we'll put it up on our website, some super tips for on the Switzer Daily website. So, and again, only 20 sleeps to go.
And also, you wrote the chapter on superannuation in my book, Join the Rich Club, which is
always even better, boat.
And he always tries to make it. He wrote the book as one lousy chapter, but it was a good chapter.
It was the biggest chapter.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.